Good evening. Ira Epstein of Linn Associates with your financial market wrap-up, and this wrap-up is for Wednesday, and we're now at the 9th of February, 2022 at 6:40 p.m. Central Time. Well, the elephant in the room, whoa, it's going to be a big one tomorrow, the CPI numbers. Now, are they going to be hot numbers? They're going to come in as the market expects, or are they going to start cooling down? That's going to be the big question, and it will rule the day when they first come out. We're guessing a number year over year of about 7 to 7.6%. That's the spread I've seen of the analysts, and around 5.9 or so on the year over year core CPI. These are the year over year that we're looking at. Both numbers are expected to be up, be it month over month, year over year, between 0.4 and 0.5%. So that's what we'll be looking at. The other events that you have to look at is what's going on with COVID. We're seeing country after country in Europe. Sweden today is abandoning all its rules on COVID. In other words, it's over. They've declared the pandemic done there. The UK, just about at the same spot if you look at what their rules are doing. New York City has gone where you don't need masks in most buildings now. Chicago and Illinois today. Governor came on. This month, we are going to have to get away from masks. You're not going to have to wear them, and you won't have to show to get in the city of Chicago your vaccine card to go to a restaurant, a bar, or any of that. Now, this all matters if we don't get another wave of COVID, but the way that the numbers are going, it's like that. And you have to give credit to the scientists. They told us about 3 weeks after we watch what's in Europe, you'll start getting this draw here, how the numbers are going to work, and you take it accordingly. And they have been right on the money. So now the question is, do we get fourth shots? Johnson & Johnson, I'm sure you heard already in the stock market, has elected to do what? They're not even making their product. The reason I put this up for you, tomorrow we are having our live webinar. So if you haven't gotten an invite for it, I open the chat room at 12:15 p.m. Central Time. I record, in other words, we start at 12:30. I record it for my purposes, but I don't publish it on the website or send it to anybody. It finishes at 12:50. It's 20 minutes long. To get to it, all you need to do is take your cursor right now, move it up to the top. You'll see an icon, click on it, fill everything out, and away you go. You can do this if you replay it, or you can do it now to open another page anyway. So I think you'll find that works out pretty good. If you have questions, call my staff. Okay. So, as I said, it's going to be an interesting day, especially the CPI figure. We've been coming up in the S&P back, and I've been pointing that I thought we'd get very close to the 18-day average again. That's 4,600. You feel like the market's gone up a lot more than it has it? I took this chart and I decided to put on Fibonacci Retracement for you for today. I've marked off the recent high and the low. Then we can look at the percentages. They're right here for you. So here's a 38%, a 50, and a 62% retracement level. You had been gotten up on the first run, and I said this to you, all the way up here, 45.77, pulled back into the 50 level percent, and now you've come back up right up through here. In other words, you've met a lot of Fibonacci counts. If there's room for this market to run away from that, well, then you're opening the target for these highs. I don't know. I have my doubts that it's going to run up that much. That's just my opinion. Is the trend up in the market? It is. You've got higher lows, higher highs. Are we over key moving averages? Well, you're over the 18 and you're now fighting again at the 100. We've done this before. You get a little bit over it and then you come back under it. CPI could set this off any which way tomorrow. But let's assume, for the sake of discussion, that the market wants to accelerate from here. If it does, it's the Bollinger Band top that I think will be the real rough resistance, and that's at 46.38. So from where you're at, round figures, 60 points away or so, right in there. If you pull back, support back at the combination of the 18 and the 200-day moving average of closes, and unfortunately you're overbought. So you're not even close to embedding. I just think that you're in an area that you're going to see some profit taking. Am I bearish? No, I have no reason to be bearish, but I have reasons to think the market's gotten to what we'll call its counts, and that's about all that it's worth. In the NASDAQ, same thing. Now, I'm not going to put Fibonacci on every one of these, but higher lows, higher highs, same thing, coming up right through there into resistance. The Dow's stronger. We've said that all the way through. It's acted better than the other markets. Its a candidate is to hit the 35,918 level, which is the upper Bollinger Band, and I look for resistance there. So let's assume the markets want to run after they get to CPI. I'm looking at those Bollinger Bands and all of these that could be a big resistance number. In other words, I wouldn't get married that you got a big upper leg coming and it's just going to keep coming on that, okay? I'm certainly not bearish, but if you were sitting next to me, I'd be telling you, you might as well put some orders in and maybe you want to take some money off the table if you're long. I don't know if you are or aren't. When I look at the combination of the Russell, I get, for the first time, a little bit excited. I told you 2 days ago the market had come to life. It was the first time that I saw a buy signal hit the market. You followed through today in an early evening trade. I don't think you're going to get much beyond the upper Bollinger Band before you back off a bit, but I'm not bearish. And I don't remember the last time I said I'm not bearish on the Russell. I do see an overbought market, and I have lots of reasons for that to occur. And if we take a look at the VIX, it should be coming in. There you go. It's into its support area here of the 200-day and the 100-day. Again, are you going to be able to take this out and go to a lower band to get a real move to the upside in the stock market? That's what you'd have to do. You'd have to take this and get it down again into that 17 level. That would surprise me. I'm not saying it can't happen. It would surprise me, and the trend is down. Being surprised and being a chartist, you have to wear two different hats. It's nice to think something. It's better to trade off of that. In the 30-year bonds, lower highs, lower lows. You can see where the market's fighting its battle right there. And what are we seeing on all the interest rates? They've rolled to the right-hand side of the lower band, but they haven't turned away from it. So they're making you guess, well, what is that CPI going to do? Is it going to keep more interest rates quicker coming at you? Maybe a half point if inflation is super hot on the CPI. Can you imagine what an 8 reading would do? I'm not saying it's going to happen, but try to imagine, okay? And I'm not thinking that'll be the case. What would happen if you had a 6.8 reading instead of the guess where we're at between 7 and 7.6? Well, that would mean that the Fed could say, wait a minute here, we're peaking out quicker. But I'm not seeing where those numbers would come from. The commodity market's been on fire. Grains are at multi-year highs. Copper, I just showed you, has come back to life. Other metals, lithium, aluminum, they're all been moving to the upside. I'm just not seeing how that could be the case. When I look at the dollar index, we're in a downtrend, but I'd be very leery that it's going to be able to get through this 100-day average and make another leg down because it's oversold. The trend is down, but does it have the power after that break without a lot of congestion, or consolidation is the right word, to see that? In the euro, back up to where the resistance is, the 100-day. It's shown itself that that's it. It could go, if you have a crazy number tomorrow, why not get to the upper Bollinger Band? But you need a real crazy number to do something to get the dollar real negative to get this up. And I don't know what that would be. In the British pound, it just doesn't seem to be able to get out of harm's way here. I thought the market by now, in all honesty, was going to pick up and make its run at the upper Bollinger Band. I'm surprised it hasn't. It's in a support level. The trade fails if you get under 134.87. It's a success if we get to 136.58. That's how I'm viewing it. Bitcoin, the market's back up to the what number here? Fighting a battle at the upper Bollinger Band. It's overbought already. I think it's spent itself a little bit here. I'd be careful. Now, I'm hearing people on every side of Bitcoin. First of all, you're not hearing $400,000 numbers from Tom Lee and a lot of other people that are very good, but those were the numbers. And I'm not hearing $10,000 again from some of the analysts, Abigail, that I was watching her 2 weeks ago on Bloomberg. So I watch what people say about it, and I look for the extremes. This does not mean that in time neither of these people will be right. I don't know. What I do know is we're getting more and more central banks coming out not in favor of it. I saw the IMF today. They wrote a paper. Doesn't sound like they're behind digital currencies in any manner to me. Read the papers. In Brent versus WTI oil, you got back, and I mentioned this the other day. Let me get you there. You got back over here, and this was on Monday. You got back up. Actually, I think you did this on Friday. You got yourself over that number. Couldn't pull back, and now you're accelerating to the upside again. So the differential between the Brent and the WTI, you got to keep your eye on it. And I have moved all of our contracts here to the April contracts. Now, you lost your embedded reading. I could be very wrong, but I think the pros are selling right now, looking for the 18-day average back into play, and I think they'd be wrong if you make a new high on the move here. I think they're doing the identical thing in the WTI. I think their stop has to be over that high, and they're looking for the 87.70 level here. I think they're doing the same thing in the heating oil, and this is the March contract, by the way, looking for the 270, 290 zone, all because you lost the embedded readings. And then we get to natural gas, and I've changed gears into the April contract now. So you're in a downtrend that's coming to the first good support zone between the 18-day average and this number. The trend is down, the bias is down, momentum is down. Still a bear market until you get back over. This number was what, 434? Is that what it is? I think it is. 434.30, that's it. So until that's taken out, I think you'll see at the 420 area, willing sellers suddenly show up. Remember, we have the live chat room. That's tomorrow. I can't wait. It should be a ball to do this one because we're going to have so much to talk about. Again, if you don't have, if you didn't get my invite, just take your cursor, move it up here. You'll see the icon, click it on. I'll see you tomorrow. Take care.